The two words reasonably certain can change your lease term, flip your lease classification, and alter your expense pattern under ASC 842. This one judgment call drives some of the most consequential decisions in lease accounting. So let's break down exactly what reasonably certain means, why it carries so much weight, and how to think about applying it. So let's start with the lease term, because that's where most people first encounter this concept. Under ASC 842, your lease term is not simply the stated contractual period. It's the non-cancelable period, plus any renewal or termination option periods where the lessee is reasonably certain to exercise or not exercise the option. So imagine you sign a 5-year equipment lease with 2 5-year renewal options. If you determine you're reasonably certain to exercise both renewals, your lease term is 15 years. If you're reasonably certain to exercise one, it's 10. If neither, it's 5. And that difference can absolutely change the classification. A 5-year term on equipment with a 20-year useful life probably doesn't meet the major part of useful life threshold. But a 15-year term on that same equipment likely does. And classification determines whether your expense is recognized on a straight-line basis as an operating lease or on a front-loaded basis as a finance lease. So this one judgment call on the lease term cascades through the entire accounting for the lease. And purchase options carry the same weight. If a lease grants the lessee an option to purchase the underlying asset and the lessee is reasonably certain to exercise it, that alone classifies the lease as a finance lease regardless of what the other criteria indicate. So the reasonably certain threshold isn't just influencing classification indirectly through the lease term. In the case of a purchase option, it's a direct classification trigger. So what exactly does reasonably certain mean? This is where it gets tricky. There's no rule that says if you're 80% sure it's reasonably certain. It is understood to be a high threshold, and practical guidance generally interprets it as implying a probability of around 75% or higher. But the topic itself provides no specific figure or bright line test. So how do we make that judgment? Well, ASC 842, 10, 55, 26 gives us 4 categories of economic factors to consider. First, contract-based factors, things like the terms of the renewal option itself, whether there are significant penalties for not renewing, or whether the renewal rate is favorable compared to market rates. Second, asset-based factors. Has the lessee made significant leasehold improvements that would only provide value if the lease is renewed? Is the asset specialized or customized for the lessee's use? Third, market-based factors. What are current market conditions and would comparable space or equipment be available at a similar cost? And fourth, entity-based factors. What is the lessee's history of exercising similar options? And how important is the underlying asset to the lessee's operations? The common thread across all these is whether a significant economic incentive exists to exercise the option. If walking away from the lease would mean abandoning significant leasehold improvements, paying substantial termination penalties, or losing access to a location that's critical to your operations, those are strong indicators that renewal is reasonably certain. On the other hand, if the lease is for generic office space in a market with plenty of alternatives and the renewal rate is at or above market, the case for reasonably certain is much harder to make. And I want to point out something important about the nature of this assessment. Because there's no bright line, this is an area where professional judgment is paramount. 2 people could look at the same set of facts and reach different conclusions. That doesn't mean the standard is broken. It means the standard is asking you to genuinely evaluate the economics of the arrangement rather than apply a mechanical test. And your conclusion needs to be supportable. You should be able to articulate the specific factors you considered and explain why they led to your determination. The key is that it is not simply a decision made by management one way or the other. In fact, when reassessing whether we are reasonably certain to exercise or not exercise an option, even a change in plans by management is not alone sufficient to change our assessment of reasonably certain. The assessment is about economic incentive. there must be economic substance behind the determination. And again, this judgment has significant impacts on lease classification and in turn our subsequent accounting. That's why these two words in ASC 842 carry so much weight. Reasonably certain isn't just a threshold to check off. It's a judgment that touches 3 of the 5 classification criteria and drives some of the most consequential accounting decisions in lease accounting.